Good day. Ira Epstein of Linn Associates with your financial market wrap-up for November 20th, 2019, and the time right now, 2:05 p.m. So this is unusual for me. I rarely put out a stock index wrap-up until the market has finished in the futures, which is 3:15. Frankly, I don't care about the 4 o'clock time frame because I'll know where the market finished for you. I don't have that today, but I'm having an eye exam, and if you've ever had your eyes dilated, and I've got that at 3:30, there's no point in coming back to the office. So away we go with that. Let's talk about where we're at in these markets in the day's events. If you've been watching TV, you're watching Ambassador Sondland get drilled. The conversations are every which way. I've become convinced that in the House, they will impeach the president. It'll go to the Senate, and from there, the trial will take place. Have I seen anything enough to impeach the president in the Senate? To date, I have not. I think the trial will go there. And I think the market's looking at that. So the market's looking at that part. Okay, is that enough to weigh on the market? I think what put the market down earlier was when a Reuters report came out and said that the phase one part of the U.S.-Chinese trade deal has hit so many snags that within the White House, they didn't name the source, they're now saying maybe 30-20. In other words, nothing getting done this year. That also means, what do we do with the December 15th tariffs? If they go into place, you get companies like Apple, others, got to pay attention to all that. So the gold, I was surprised, didn't rally more on that. The silver market is sort of steady. Copper, I expected down. That fit into the parlance. Energies are a surprise to me, but in all fairness in the energy market, if you saw the EIA number compared to yesterday's API number, no. It came in at 1/5 or so the size of the API number. So being down 200 yesterday, you got to bounce. We'll cover that in a minute here. Bonds and notes, they are holding on to gains from the combination of the fear on those two elements. So when we come to the stock index, again, remember, I'm just around now 2:07 in the afternoon, 2:08. The market is having a down day, down 13 points at this juncture. You still have the bias to the upside. You're in an upside thrust. You haven't even had much of a correction, and you're well over the last, the 18-week moving average of closes, which is 29.92. We'll leave it at that. When we take a look at a daily bar, you're getting a break in the market, but instead of being towards the top or bottom, you're about midpoint in the market right now, and the market is still got the pattern of higher lows, higher highs. So the support probably came in, for those of you that have my morning subscriber video at that key moving average we talk about there. I certainly don't look very bad on that number. I feel pretty good about what I told you. It's what did we record? It's 6 in the morning, and we were coming down, and I said, watch it there. And I think the pros are taking advantage of some buys in the market. They might be pumping out here. It's an awful big day to go through all this. But remember, you've been down to 30.90. You're already 16 points higher than that. Actually, 26 points higher than that today. That's a pretty good rally off of that key average. Now, where's the market now? Well, we're sitting here at this point still over the 18-day average of closes. That number is 30.80. Let's call it 30.81, just round it. The last break low was 30.75.70. Tomorrow that number is going to climb again. It climbed from yesterday about 4 points, day before about 7. But as the market's down, just think of what I'm saying, and you're climbing, you'll narrow in. So it might be 2-3 points higher tomorrow. That's what I'm guessing. 30.75 still the key number. You don't want to take that out. If you do, you lose this thrust to the upside. Does that mean I don't think we'll have a Santa Claus rally? I didn't say that. Nothing surprises me in anything, but we're dealing with the lack of a phase one deal. I'm not worried about the impeachment. That's going to be into next year at some time. And do I think the House is going to vote for that? I don't think you'll find a bookie that's going to say it's not going to happen. Probably get great odds if you bet and it didn't, but I don't think you'd win. As you can see, just hanging here, didn't quite hit the upper Bollinger Band. In terms of momentum, now I'm getting concerned. You haven't heard me say that in a long time. You could tonight, with a close that doesn't look good here, and when you reopen, have that embedded reading lost, which would put into play price and that 18-day average of closes. That is why I have concern right now. In the Nasdaq, same thing. The market is already losing the embedded reading. If you were to settle just as you are, for the first time, that red number is under 80 for this whole length. Is it time to bail? Yeah, probably. I'm not giving you a trade wreck, but for those that play momentum, yeah, they might want to take another look. Is the market turned bearish? Well, the last break low here was 82.20, so technically not. But for me, what rules the day is looking at right here. When you lose that momentum, that's my fear. Now, there's still an hour left. What if you rally in between now and then? That's the difficulty. But if you're on the phone with me, I'd give you a warning. That's all I can say. What about the Dow? Oh, I've got warning here too. You're losing the embedded reading. So I'm beginning to see the probability increase that price and the 18-day average want to come together. In the Russell, look what's going on. Now you have a downtrend. You have lower highs, lower lows. Prices are trading right now at 15.95. Is it a true downtrend? Nope. You're over the 18-day average. That means the bias is up, and even though the swing line is down, nope, you're not trending. You just went to that number, and that's what I'm wondering what happens in the other indices. Momentum, it is in a corrective mode. You still have one of the numbers over 70. They both got to get under that. Then I can say it's not overbought any longer. In the VIX, you never did get to the lower band. You went to the upper band. It's a little too difficult to sell that upper band when you're down at an 11 or 12 number. I'm sure some pros are doing that, looking for the market to retrace back to the 18-day average of closes. But I've learned enough here in these low numbers that you get over those numbers, you get a pop, you got to be careful. And you got caught last time selling them there. It's much easier to sell puts down at this low area. They seem to come back to that 18-day average than selling the calls. Now, you may not agree with me, but it's not about agreeing with me. It's what I'm seeing. In the T-bond market, uptrend. Now, the 159.25 area is the 100-day average. If you can close over that, you're putting into play that the next resistance point's 161.11. Support back at the 100-day average first. You're nowhere near overbought, just an uptrend. 10-year note. Will the market be able to stay over that 100? It's so close to it that if you broke from here, I'd not look for that to be the support. I'd look for the 18-day average. Trend up, bias up. If it can poke through this, then the 130.09 level becomes the next zone. I'm not looking for back here when the market got to that 144 level. I think that lower number is going to be an important resistance point. TLT, same thing to me. Higher lows, higher highs. So the combination, impeachment inquiry, likely impeachment in the House of Representatives, no phase one trade deal, weighing on these markets, probably kicking them to the higher levels. By the way, the FOMC meeting was today. I read it. I didn't see anything that takes away one way or the other. I think that the market's still not counting on any more rate cuts until we get into 2020, and then the market will take a fresh look. The Fed is worried about global growth. They said it, and I kept reading that. Dollar index, battleground, 18-day average of closes. And you're about 5 points over it, but so what? You still have a higher high, lower low. We said that as the market got down to the first challenge of the 100-day and the 18-day average might stall there. It did. Now you're getting over it. You could just as easily be under it tomorrow. You're not trending. You're correcting an overbought condition. You've got the higher high, lower low. Eurocurrency, battlegrounds, the flip-flop of the dollar. But it's a little different picture. You've got lower highs and a lower low in the market. You're also under the 18-day average. So you've got momentum up, you see that. You got bias down. You're fighting at the 18-day average. Right now, I think the bears have control. They lose it if the market pops through Monday's high, which was 111.095. So that's a number I'm watching. That could give you suddenly higher highs, higher lows over this number and put into play this area. You're right at you're at the cusp of something changing if it's going to. British pound. Look at the lower band, the upper band. You're caught in this sideways action. For the moment, the bulls are controlling the market, and I think they're supporting it against the 18-day average of closes. The risk would be back under this last break low here. I think that's around 128.27. It's a lot of play in the market, but I do think they're controlling the market for the moment. Momentum has sort of drifted. It's going to the sideways action right now. In the Japanese yen, support the 18-day average of closes, and you came right back to it today. You can see how you've been fighting at it now for all these days, even today. But the bulls control the market for the moment. They have the pattern of higher lows, higher highs. I think they're supporting the market against the 18-day average. I think they'd say they're wrong if you got under 91.81.5, because not having taken that high out, you could end up with lower highs, lower lows if that happened. But I do think they're supporting the market right here. Bitcoin, I think the bears have covered yesterday. Doesn't mean they can't go lower, but the first challenge of a Bollinger Band, I'm comfortable after a big move down like that. Almost, what is that? Almost $200 an ounce? Or not a coin, 2,000 a coin. I said that wrong, almost 2,000 a coin. That's a pretty big break. Notice the Brent Jan. Yesterday I said, gee, it's lifted itself up. If it breaks, I wouldn't be surprised the 18-day average of closes supports it. You're right back to that today. So it's a market that's sort of looking all around, and what a wild market. It got down from the upper Bollinger Band on Monday to the 100-day average of lows today and reversed off that number, that EIA number that was nowhere near as bearish as the API number. In the Jan, upper Bollinger Band just missed the lower band today, the 100-day average and 18-day average. You went slicing right back through it. Are we trending? No. You weren't trending coming in. You had a higher high and low pattern, and you basically still do. Gasoline. Just missed that lower band, because that would have been for the shorts. I'm sure that they were looking at that very hard. Now that you're to the upper band, I think they're blowing out of the market. This market seems to be caught at these bands. Pay attention to that. And in nat gas, yeah, bounce. I don't know if you're going to make it down to this number. There's some colder weather as I'm looking at the forecast, and that's what you're playing right now in nat gas. You're playing weather markets. You're up $3. We'll see where it goes. You know, one of the things I like to do for you is write reports, but I stopped writing. I went to videos because I can do so much more in a 10-minute video, an 8-minute video, than I can. I don't want to write pages. It's beyond that. You don't have to. I can show charts clear. So I did a special report on grains. You might want to go look at it under research on our website. You'll see special grain report. It's going to cover price counts. You should learn about those. And in this report, I show you how to plot them. Then I'm going to show you seasonals, a 5, 15, and a 30-year. I'm going to do monthly, weekly, and then a whole series of daily charts. So hope you take advantage of it. It's only up 5 days. I think today's day 2 already. So IraEpstein.com, under Research, Special Grain Report. You can click up here. It'll take you right to it if you're watching me on YouTube. I'm Ira. You have a good day, and I'll see you all tomorrow.